Well, welcome everyone, and we can go ahead and get started. My name is Casey Smith. I'm a community associate at Trusted Health. I'm also a pediatric ER nurse. I was a travel nurse for over 3 years, so I'm all too familiar with travel nurse taxes. I still actually have a lot of questions for our host today, so I'm really excited about this event. Just a few things. If you do not want to be heard, please place yourself on mute. We don't want any background noise to interrupt our speaker. Also, if you have questions, please throw them in the chat. There will be Q&As throughout the event, so please just put your questions there, and me and Nicole will be able to help you get those answered. At the end of this event, there will be a post-event survey. If you could please fill that out and let us know how we did, we would really, really appreciate it. We want to know the good, the bad, what we can do better, so we can continue to putting out really high-quality events. With that said, I would love to introduce you to our host this evening. Mr. Joseph Conte, he's a CPA. He is also the owner of Travel Nurse Tax, and I will let him take it from here.
Thanks very much, Casey. I appreciate it. And thank you, Nicole, and everyone at Trusted for allowing me to host this event. I wanted to ask one question before we start, Nicole and Casey. I'm seeing the waiting room. Should I be letting people in now that I'm the host, or is that something you guys can handle?
We got you.
No, we're all over it. Don't worry about it.
Okay, it keeps rolling forward. Okay. So I want to start off by introducing myself briefly and what we do here at Travel Nurse Tax. So I'm a CPA licensed by the state of New York. I'm an IRS approved tax preparer as well. I spent the first 6 or 7 years of my career working for the big accounting firms, Arthur Andersen, KPMG. And then about 12, 13 years ago, I went off full-time and started travelnursetax.com. At that point. And really one of the reasons we started this business is because my wife is a travel nurse at that time. She still takes travel assignments on occasion in the summer. Usually it's not as easy with the kids these days, but we still try when we have some time. And I saw firsthand that the tax needs really weren't being met for travelers, particular multi-state and multi-employer travel nurses. So it was kind of hitting home for me as well, as Casey mentioned earlier. So at that point, it was a natural fit for me to start the business focusing on this niche, and it's been great ever since. It's 90% of the time we're working with travel nurses, travelers in general, and helping them in any way we can. Really, our mission is very simple. It's to provide expert and affordable tax prep services for travelers. That's really it. This is our business and this is how we make a living, but we actually enjoy it. We love working with nurses. As I said, I'm married to a nurse, nurses all throughout the family. This is what we do, and we love it. So half the time we spend helping travelers. We take phone calls year round. Just happy to offer help in any way we can. So keep that in mind. If you have questions after this call that aren't answered, feel free to call or email or reach out, and we'll see if we can help. Okay, that was the intro. I think we have a little poll coming up now. That's a trick question.
I made these, so I tried to make them a little tricky.
That's tricky.
I'm sorry.
I'll let you know when we get to almost everybody replied. So give it about 10 more seconds. We'll see if everybody votes.
I feel like travel nurse taxes are not always common sense.
All right, that should do it. Ending the poll, and I'll share the results. There you go, Joseph. What do you think?
Well, I do think it's a little bit of a trick question because it in some cases it could be the same. So it's a true or false. We can get into the next slide and kind of talk a little bit more about that. That's kind of in a nutshell what faces the traveler when it comes to tax time. It's not an easy answer. So each circumstance is somewhat different, and that's why also I invite you to reach out if you have specific questions on your circumstances after the fact. So let's see if I get to the next slide. Can I X out of this or leave it up?
You can X out of the poll.
Okay. So, ahead of myself. So in general, when it comes to a tax home, it's the area around where your employment is, where your primary employment is and has been And that can be different from the location of your primary residence. So it can be the same and it can be different. It just depends on your circumstances. And we can get into more of that on the next slide as well. So what's important for the traveler is a tax home is required in order for you to receive the stipends tax-free. That's really, one of the big financial draws to travel nursing is the stipends, the tax-free stipends. So we want to make sure that we keep you, in compliance with that. So here's the next slide, is basically how do you establish and maintain a tax home? This question does come up a lot. It's probably the most popular question. So here's the story. You must meet 2 or 3 of these requirements in order to be, eligible for the tax-free stipends. One is incur and pay living expenses while traveling at your tax home. So, when you go away for 3 months, you don't pay on the 4th month. You should be paying throughout that period of time. We call it rent. It could be, a shared living expenses. Rent, you don't have to have a lease or a mortgage. It can just be kind of a sharing of the overall home expenses. Should be at market value. That's hard to establish as well. You can look on Craigslist or some other websites to try to find the least expensive or the lowest price room for rent in your area, and that's a good way to gauge that. So the second one is to work there. Like I said earlier, your primary place of work. It's economic home is another way to think of your tax home. It's where you've worked. Now once you have your tax home established, you can travel as long as you return regularly, which is number 3. You should be coming back home to your tax home at least 30 days per year. It can be broken up into different stays. Doesn't have to be consecutive, but it should be at least 30 plus days, if not longer. The key there is don't abandon your tax home. If you abandon your tax home, then you're at risk of having those stipends taxable. And, that's from a financial angle, that's not really what anybody as a traveler would want. So those are the main bullet points. Let's see. So now we probably have some questions on those.
I actually have a question while we're waiting for people to come in. You can throw your questions into the group chat if that's easiest. But how much, how often do you have to work at your primary place of work to maintain that? Can it be like once a month, or is there a frequency required?
Yeah, that's another good question. So let's assume you have your tax home established. You're working in a tax home area. You take a travel assignment. You should be returning to that assignment every year. You shouldn't be away for longer than 12 consecutive months. And when you return to that assignment, ideally you should be working, taking local work if possible here. So at some period of time each year, a few weeks, a few months, the longer the better. But as long as you're returning home within that month each year, you should be okay.
Perfect. Well, it looks like we have some questions in the chat that I can go from. What if your spouse is paying rent at home?
Your spouse is paying rent at home. So you have a home that let's say you and your spouse are both paying rent on, and the traveler goes away and the spouse continues to pay. If that's the case, then if you're filing jointly, you're duplicating living expenses. That sounds like you maintain your home, as long as it's market value and a reasonable amount.
How can they track, or can you prove that you've come back those 30 plus days per year?
So it's sort of the honor system. You should have, and we're going to get into that a little bit later. One of the slides later talks about some deductions and record keeping. So you should be tracking your travel expenses and your travel dates and locations just for that reason right there. So you have a record of where you were, when you were there. So 2 or 3 years passes by, you might not exactly remember your assignments, your dates and locations. So if you track those records, that's one way to do that, to come back. So you don't have to report that when you do your tax returns, but you should have that. And your agency might ask for that. And we ask for that when we prepare returns, just for a record of travel history. Not necessarily receipts, but we need just a record of the travel history.
What is the best way to pay rent so we can prove we are paying rent?
Yeah, there's lots of ways to do that now. I would say I can answer that by saying the worst way is with cash because there's really no way to track that. So something that has a footprint or a trail, a paper trail, a check will still work, or you can use Zelle or one of those apps you can use to transfer funds. Any of those options are good because there's a record of it.
Okay. What happens if you start a PRN job in a different state just temporarily due to the current situation of not finding a travel job?
Okay, that's actually an interesting question. So if you're taking a PRN job out of state, so meaning it's basically a travel assignment, but just not through an agency where you're not paid stipends. Is that, assuming that's the case, you still have to pay local tax in the state in which you're working. There's no reason you can't do that. So there's no problem with that. As long as you're returning home each year, you'd still maintain your tax home in your current state.
Okay. How does living in an RV differ? It isn't a lease or a mortgage.
Yep. So I hear some noise in the background, but the question was, how is living in an RV different?
Yes.
Well, if you're living in an RV, if it has a kitchen and bathroom, if it's essentially a residence, you could use that as your tax home. So yeah, you could use it as your tax home if it has a kitchen, bathroom, and that kind of thing, a bedroom, sleeping quarters.
Okay. So is it just kind of like paying, when you go and are like paying RV spots? I don't know what you call those. Like when you're paying for an RV spot, you can kind of
like a hookup. Yeah, well, so your tax home, maintaining your tax home would be paying the RV. If you're living, if you're living permanently in the RV, if you have a home, let's say somewhere, a physical home that's not that's stationary, not on wheels, and you take an RV out to an assignment, that's also okay as long as you're maintaining the tax home, the physical tax home as well.
Okay. And then we just have time for just a few more before we need to move on. Also, if you are not muted, if you want to throw yourself on mute. When you say return to tax home, does that mean not working for 30 days?
That means when you're returning to each year, when you return to your tax home, you should be working for that period of time, if possible, in your tax home, at your tax home. Certainly look for work and try to pick up work while at home to maintain the tax home status.
Okay, awesome. And then one more, what if I live for free in a paid off home my boyfriend pays taxes on? I pay internet.
So yeah, if there's no mortgage and there's no bills at the house, if you're paying living expenses for that residence, then that would be fine. You can't make up living expenses. If you have a residence that you maintain, you return there, that works. You're paying utilities, you're paying property taxes. That's perfectly fine. And I'm jealous. I lost the video. I'm not sure, Casey. I can't see the video anymore. So there's a way for me to do that. I don't know.
Are you saying you can't see your slides?
I just see the slides, just not the actual video.
You're good. You're good on the video front, but sometimes it hides in the bottom dock.
Okay.
You find Zoom in your dock.
Okay. All right. We'll go ahead and move on to the next couple slides, and hopefully we'll have time to come back to these.
Okay.
All right. Looks like it's for our next poll.
We'll give it a moment and let people answer.
Giving the answers away.
All right. Sharing results. There you go.
Okay. All right.
Feel free to X out of it when you're ready, Joseph.
Okay, so the answer to that question is so you don't really need to keep receipts for food, for meals. That's one of the things that the IRS, so previously, back to the slide. previously the IRS allowed meal deductions for travelers and for any employees, as long as you're itemizing your deductions. Even then, you did not need to keep receipts, but now, especially since the Tax Cuts and Job Act of 2017 came out, the meals and those deductions are no longer deductions for travelers. So we're going to go to the next slide, and we'll talk a little bit more about that and some related expenses. So going right into that. So what is deductible now with the new tax law? So like I said, most of your meals, travel deductions, work-related expenses are no longer deductible. It doesn't mean you shouldn't track them and keep track of some of the records, especially related to travel. And that came up a few slides earlier. So you should still be tracking your travel expenses just for this reason right here, to show that, for one, that you are traveling. You know, it's just good to have those records in case you ever needed to show that one day down the road. And secondly, if you're receiving a stipend or a travel allowance from your agency, then it's important to have the expenses documented to verify that you used it for travel. If you didn't use it, or if you didn't use all of it for travel, it could become an income, taxable income for you. So you want to keep records to show that you were traveling, really for those two reasons. So now the next logical question, well, what is deductible these days for a traveler? For a W-2 employee in general, you still have mortgage interest, property taxes, donations, sales tax, and state income tax or sales tax, whatever's higher. So those are still deductible. So the itemized deductions now are less common for most travelers and most people in general, but the IRS allows a standard deduction now that's much higher. It's basically twice what it was in the past. So what that means is you're getting a $12,200 standard deduction right off the bat without having any of these expenses on this list right here. So a lot of travelers are still getting a nice deduction. You know, oftentimes a traveler who had 2, 3 assignments or 4 assignments during the year might have had more than $12,000 in expenses, but this is the new tax cut. That's the new law we have, so that's what we have to live by. The upside of that also is the tax rates have come down in general, so people are paying less overall dollars in tax. So, that's a quick section, but do we have any questions on the deductions?
So we have a few questions we did not get to the first time, so I might just kind of go through those and see.
Sure.
The ones, just to kind of clarify a few things. If you happen to move, how long is it required to live or work somewhere for it to be required to be your new tax home?
Yeah, that's actually a really good question. I was planning to touch on that. I thought it might come up. So to have a tax home, you can't just say, oh, I want to pick, I don't know, Colorado's my tax home and use an address and there I am. So, I have a friend who lives there. It doesn't really work that way. You should, but on the other side of that is the IRS can't say it's not your tax home. If you move somewhere, and you're working there and you decide to travel right away or shortly thereafter, there's no reason that you can't do that. As long as you have true ties there, you're incurring expenses, you work there for a period of time really to start out. That's really the best way to do it, to establish that as your tax home. You do that and you return there every year throughout the year or for 30 days plus, you're fine. If you go move to Colorado, let's say from Arizona, and take off on day one on a travel assignment, that's not the best idea, because you haven't worked in your tax home. You haven't really established that as your tax home just yet.
Okay, and I do want to ask this one just to clarify for a few people. Did you say that you had to return to work in your tax home even if you're maintaining through duplicating expenses?
Well, so let's back that question up. If you start off as with a tax home, you're working in your tax home area, then you go out and travel. Once you're established, if you're traveling for 12 consecutive months and not coming back, that's a problem. You could risk losing your tax home if you don't return home for those 30 days. Now, I would recommend when you do return home that you do work at home if possible. Pick up shifts, if you can, when you come back, at least look for work. But, the IRS is looking for your tax home to be your economic home. So where your primary place of business, is. So before you travel, as long as you meet those requirements, then you're good to travel for the first 12 months. But you should come back and work if possible.
Okay, thank you for that. I'm going to go down here. So I traveled with my RV and rent out my home as a VRBO when I travel. I claim that income on my taxes. Does that still count as income for my tax home, or do I still need to look for a job for 30 days every year?
Well, that's actually, there's a couple of things going on there. I'll start with the first half of that. If you're renting out your home while you travel, you know, in general, if you lease out your home for a full-time lease and you travel, you're basically giving up your tax home. Now, if you're doing VRBO or short-term or room rentals, things like that, then that's a different story. You can still maintain that as your tax home. So that's sort of a question that usually comes up when we're talking about like VRBO situations. Now, the second half of that was, is that rental income considered working at home? Was that the second half of that question?
Yeah, sorry. Yes, I think that's what they were asking.
Okay, so it's not really considered working in your tax home for purposes of establishing and maintaining your tax home. That's a passive activity, so it doesn't fit that qualification.
Okay. I rented a car in Hawaii for 6 months. Is that deductible?
If you asked me that 2 years ago, I would say yes. Right now, it's not deductible because of the new law. It gives you a higher standard deduction. It does not allow you to deduct rental car and those types of expenses. Now, my answer to that question is I'm assuming that you're working as a W-2 employee, which, you know, the great majority of travelers are. So if you're working as a W-2 employee for an agency or a hospital, then the answer is no, it is not deductible. If you're working as a contractor, a 1099 independent contractor, then you can deduct those expenses. But that's not very common. It's very atypical to see that for a traveler.
Okay. When did the new rules go into effect for not being able to take previous deductions?
2018 tax year was the first year where you were not able to take those tax deductions. The travel, the work-related expenses, liability insurance, things like that. 2018 going forward.
Okay.
So if you haven't filed your taxes for 2017, you can still take those deductions. And there's people out there that haven't, and so you can still do that.
Okay. What was the name of the deduction that most travelers get?
Well, in the past, prior to the new tax law, or?
I think now. I'm assuming that's what I meant.
Yeah, there's really not that many deductions related to travel that you can take any longer. It's mortgage interest, property taxes, sales tax, and state income tax, and donations. Those are the main ones that you can take now.
Okay. And let's see. Are deductions a different thing than receiving the tax-free stipend? So maybe we just need to explain that a little bit.
Yeah, okay, so they are different. So the tax-free stipend is an allowance you receive, you know, usually with your paycheck every 2 weeks or every week. And that becomes income to you if you don't have a tax home. If you do have a tax home and you follow the steps we've been talking about, then there's no tax consequence to that. That's much better than a tax deduction. So I would say you'd want to have the stipends first, and then, you know, the deductions are the kind of the next best option. But again, we don't really have too many deductions these days. So the stipends are, you know, really a better way to go anyway. A deduction is something that goes in your tax return and that reduces your income, your taxable income.
Perfect. So you could be RBO for months, come back for 30 days and work, and it could still be your tax home, correct?
Yes.
I guess
Yep.
VR for 10 months, sorry.
Yes, as long as you're returning back to your original, you know, your tax home, and you're not renting it out when you're there. You know, you should be staying in that same tax home, which I'm assuming you would. So yes, the answer is yes to that.
Okay. And we have time just for a few more before we need to move on. If you operate as an LLC, can you deduct travel, meals, etc.?
You can. So that's what I was touching on a few minutes ago. If you work as a contractor, an independent contractor receiving a 1099, that would be reported either on an LLC return or something similar. And in that case, you are able to deduct any work-related expenses, any expenses incurred in conducting and carrying out your business. It includes travel, it includes meals, lodging, things like that.
Okay, I think that answers the next question then. Are we able to take health insurance and medical expenses for deductions?
Well, yeah, yes, you can. So it's a very high bar to reach that, but you can take those if you're itemizing your deductions. So on the slide earlier where we talked about right here, you can include medical expenses here. The reason it's not here is because typically it's very difficult to reach the threshold. But if you have significant expenses, you can deduct those. So when we have our tax organizer form, when we send that out, we ask people to include medical expenses if they're significant, and then we'll make sure that if they qualify, they'll be deducted.
Okay, so we'll do one more.
Before I finish that, I'm sorry, Casey, but medical insurance premiums are not included in that if they're paid through your employer as a pre-tax deduction from your paycheck.
Okay, perfect. So I actually want to ask this one because this might clear up a thing for a few people. What specific sales tax are you talking about?
Well, there's an IRS, kind of a general table. If you make $50,000, you get X number of dollars in assumed sales tax. That basically covers, like, I don't know, if you're buying, a computer or any kind of retail purchases that you're paying sales tax, the 6 or 7 or 8%, depending on where you live. So you don't have to track receipts generally to claim that deduction. It's based on your income. There's a table. Now, if you have like a large purchase, you buy a car, a boat, I don't know, something, an RV, where there's a sales tax amount of several $1,000s, we would include that as well as a possible deduction, as long as you're going to itemize.
Oh, wow. Okay.
So a lot of people have state income taxes, though, so it's one or the other. If you work in a state that has income tax, you're probably going to take that deduction over the sales tax. It's whichever's better.
Okay, nice. Well, I think for the sake of time, we'll move on, and then we'll hopefully come back to some of these questions.
Sure. Okay. This is a fun section. Multi-state taxes. We have a poll coming up.
This is also a trick one. I apologize.
Answers are coming in. Give it another 15 seconds or so.
I have a lot of gratification that a lot of these are like split 50-50. It means I like really did a good job picking some ones.
These are like SAT questions.
I know this is actually
a little tricky.
I put this one up just so you know, because this applies to my personal travel experience.
Throwing Texas in there was kind of a wild card.
Yeah, it was.
Mm-hmm.
Couple more seconds and I'll share the results.
All right. I can't see the results actually. Oh no, I guess I can. Never mind.
41% true, 59% false. Joseph, tell us.
So it's another tough question. So the answer is you're going to pay taxes in North Carolina on all of your income. And the answer is true. North Carolina will be taxing Sally on all of her income. The fact that Casey selected Texas here was a bit of a wild card. So we can talk about that here in the next couple slides and how that and why I say that. So let me go to the next slide and we'll get into that. I'll minimize this. Okay, so it's going back to talking about taxes for multi-state. For me, this is one of the most understood parts of the process. Might not be the most often questioned by the travelers, but for me, I see the most issues here when it comes to reviewing previous returns or, just really explaining the process to the travelers. So going back to that question, your home state, North Carolina in that case, will attempt to tax you on all of your income, even if you worked out of state as a traveler. So the next bullet here, you will not be double taxed. The reason for that is the next bullet here, you have to apply for tax credits from your home state for taxes you paid to other states. Now, the question asked about Texas there's no tax, there's no state tax in state income tax in Texas. So in that case, North Carolina will tax you on all of your income, and you're going to pay North Carolina on that income. So usually in those circumstances, come tax time, you might end up owing, a significant amount to your home state, unless you had withholdings done at home while in Texas. And that's one of the points I want to bring up here in a couple minutes. We'll talk a little bit more about that. So let's get an example on the next slide, and that might help clarify. We just talked about Sally. Now we're going to talk about, let's see if this goes here. This is Natalia. That's my wife, Natalia, former travel nurse. So let's say Natalia maintains her home in Colorado, her tax home in Colorado, takes a travel assignment in Arizona. Arizona is going to tax her, let's say $500 on that income. Colorado will also attempt to tax her, say, the same $500 on that same income. Natalia's job, or my job, is to notify Colorado that Natalia paid taxes already to Arizona, and then subsequently claim a credit in Colorado to reduce taxes by that same $500. So you're not paying taxes twice, but your home state will tax you or attempt to tax you on all income earned in any state. So hopefully that's relatively clear. The next slide, I have a couple of tips to think of when it comes to planning for working in multiple states, and then we can do some questions and maybe clarify it if we need to. So here are a couple of tips. So first tip, which I touched on earlier, when filing your taxes, if you owe significant taxes to your home state, it's a red flag that there might be a problem. So if you're an H&R Block or local tax prep agency or office, and they say, "Oh, you owe Colorado, your home state, $500 or $1,000," probably it's a red flag, and there might be an issue, and you should revisit the states you travel to and the taxes you pay there. So if that happens, stop and give us a call. I've had calls come in from H&R Block lobby. "Hey, Joe, I owe $1,000 to Colorado. Why?" And I said, "Well, where'd you work?" And we walked through it. And I've actually kind of talked to the H&R Block people a few times and helped them get it right. So another thing that comes up a lot is we review previous tax returns, and sometimes you'll see that. I'll look at the previous return and say, "Well, you owed $1,000 to Colorado. You shouldn't have. You should have had these credits applied from income that you earned outside of the state." So it comes up a lot. That's why I said this is one of the most misunderstood topics. And it's one of those things that if you don't apply for the credit, the state's not going to tell you, "Hey, you missed the credit." They're just not going to do it. Now, if you don't report income, the state's going to call you up and say you owe us taxes. But if you fail to take a credit that you have available, you won't get a call, you won't get a letter, and they'll just keep the money. So just keep that in mind as a red flag. It's not necessarily a mistake, but it's it just gets my it gets the thoughts going. There might be a problem. So the next tip is something to think about. For Casey's example, if you're in North Carolina and your tax home is North Carolina and you work in Texas, in that case, your agency, you might want to have your agency withholding taxes in your home state of North Carolina. The reason is because Texas does not have a state income tax. And then at the end of the year, when you're filing your taxes, you're going to owe North Carolina probably, I don't know, let's say the $500 because you didn't have state withholdings on the income you earned in Texas. This comes up a lot. People are surprised, well, why did I owe? And this is why. So it's important to, if you're interested in not owing at the end of the year and paying it weekly or monthly, which most people prefer that. If that's what you prefer to do, then you should have your agency withhold a home state tax if you work in a place like Texas, Florida, Washington, Nevada, etc. So that's a lot of information, and there's a lot of different circumstances that might apply to each person on this call. So if you want to go over a couple of questions on that, we can do that. How does that sound, Casey?
Sounds great. I'm here for the questions. Love
Okay.
questions. I think this is a great first one to start with. What about if my primary state does not charge taxes, such as Florida?
Okay, so in that case, normally there's no issue when it comes to tax time, because let's say you live in Florida, like we do here. If you're traveling in North Carolina and working there is there is a state tax in North Carolina. Your agency would normally, by ordinary course, would be withholding state tax in North Carolina for you. So your W-2 will show that you paid North Carolina taxes on that income. So when it comes to tax time, you'll have already paid, roughly the amount you should have. You might owe a small amount to North Carolina. You might get a small refund. But the general answer to that question is you do have to pay tax to the state in which you work. If you live in Florida or anywhere else, you're always paying taxes to the state in which you're working.
And I can give an example to that. For, if I lived, for example, in Texas, but worked in North Carolina instead, even though Texas does not charge or does not do state income tax, I still will have to pay for North Carolina's.
That's correct. Yep.
Yeah. So this one, if you use a service to do your taxes, such as TurboTax, will it prompt you to apply for the home state credit so you do not miss a step in this process? So it will not. I just did mine on Saturday night, so I can attest to this. You have to label which state is your primary residence and which one you're simply working in when you use TurboTax. So just be careful with that. It will not, and then it will automatically apply the credit at the end of it. It will know to do that. But just be very careful if you do it on your own, because it's easy to, make mistakes.
I'm glad you answered that one because I didn't really know the answer. I haven't used TurboTax.
I literally just did them Saturday night. So yes, that's how that works. Let's see. I think we've already answered that one. Will you take care of that if you do our taxes so we won't get double taxed?
Yes, absolutely. Yep.
That's the benefit of going to professional. It's going to get done right.
That's right.
When do you apply for the credit? At the end of the contract or when you do the year's taxes?
So you apply for the credit on your tax return when you're filing taxes next, January, February, March, or in this case, June or July. It's at tax time is when you apply for the credit.
When looking for a tax preparer, will any tax preparer do, or do they have to be a CPA or enrolled agent? Also, Joseph, are you a CPA or enrolled agent?
I'm a CPA licensed by the state of New York, and also IRS approved, tax preparer as well. So for, nationwide, I would say you go to a CPA, but I'm biased. No, I would say the answer to that question is you should go to someone who specializes in either in travel taxes or has experience with multi-state returns. So plenty of people out there can probably do these if they have the experience in doing them. But I would suggest go to someone who knows multi-state returns and has experience with travel nurses, and the stipends as well, the taxing or not taxing of the stipends.
Yeah, I can tell you, personally, I've been to a couple of different tax preparers who were not familiar with travel nurse taxes. So just make sure if you are going to use someone, make sure you ask them, make sure they're familiar with it, because it was not helpful when I went to them.
The analogy that I use sometimes with this is if you're, if you're a, I don't know, let's say a NICU nurse and you're working in cardiology, you might be able to get the job done, but it might be a little bit tricky for you and you might not do it exactly the most efficient way. And that's kind of how it works with taxes too. There's people that specialize in certain things, and this is one of those. This is one of those.
The credit is just to pay it down throughout the year versus pay it all at the end. It's not that you don't owe your tax state on your non-tax state income.
So the tax credit that we're talking about from the states is basically, it doesn't mean you're not going to owe your home state. It means that the income you're earning out of state is not going to be double taxed by your home state, basically. So you're going to get a credit for the tax you paid outside of that state. I'm not sure if I answered the question correctly. So if I didn't, please let me know.
Let's see. Sorry, I lost my place. We are going to be sending out this recording of this event so you guys can watch it back through, and we can, if it's okay with Joseph, we can send the slides out as well.
Sure. Yes.
Let's see. How far back can your taxes be reviewed? That's a great question.
So for me to review the previously filed returns, or you mean for the IRS to go back and look at them? Well, I'll just I'll answer both. So we can go back and review as many years as you'd like. I think the question might be asking how far can the IRS go back in case you think you might have some risk or exposure. The IRS usually can go back 3 years. And then if they have reason to believe there's a significant problem, they could go back really as long as they want. If they think there's, fraud or some willful negligence or some of those really bad things that I'm sure we're not talking about here, I'm just answering the question. So they can go back as long as they want if they really think there's something majorly improper going on. But typically it's 3 years.
Okay, awesome. And then Joseph, are you taking on new clients?
Sure, absolutely. We're here to help. I have had a few calls today. Right before this call started, I had somebody reach out, and the tax deadline's coming back up now, so it's starting to become top of mind for a lot of people. So yes, we can help.
Yeah, and remember, someone's going to walk away with a free tax package today. Let's see, what time is it? All right, we can have time for one more. When you're calculating how much to withhold, is it correct to calculate that number based only on your wages, not including your stipends?
Correct, that's right. And normally the agency would do the actual calculation. You would submit a form, a W-4 form that would tell them, your circumstances, married situation, married or single or dependents, and then they would withhold based on a scale according to that. It's excluding the stipends.
Okay. All right. I think we should probably, let's go ahead and move on to the next section and we can try to come back to some.
Okay. We have another poll coming up on the 50-mile rule.
For those who are part of our Facebook group, The Modern Nurse, I know you already saw this one, so you can cheat.
There you go.
Okay. 70% said true. You must be at least 50 miles away from your tax home to be eligible for the tax-free stipend. 30% said false. Well, let's look at the next slide and we'll go over that. So the answer to that question is you don't necessarily have to be 50 miles from your tax home in order to qualify. Another sort of gray area question, which is why, taxes can get a little bit tricky. There's a lot of gray areas. So let's start with defining a travel assignment. What is considered a travel assignment? So the IRS is looking for a travel assignment to be far enough from your tax home such that an overnight rest is required in order for the person to perform the job functions. So it's a subjective definition. Some cities 50 miles might take 50 minutes. Some cities 50 miles might take 3 hours. So, if your commute is longer than you think it's should be in order for you to be rested to perform your job, which is a very, detail-oriented and important job. So, you need to have your rest. As long as it's long enough, far enough distance, you qualify as a tax home. So it could be 40 miles, could be 50, it could be 60. It just depends on really the location of where you are. Another question comes up a lot is, yes, you can have a travel assignment in the same state as long as it's as your tax home, as long as it's far enough away to require rest, overnight rest. So the next slide. So the 50-mile rule here, let's get back to that a little bit. This is a general rule of thumb. So kind of going back to the poll question, it's not a strict guideline published by the IRS. It's a general rule that, is used by travelers and general businesses. General businesses use this rule as kind of a guideline more than anything else. The IRS used to allow a moving tax deduction if you moved your home 50 miles or more from your place of employment. So that's another possible source of this this myth, I guess we'll call it. So we talked a little earlier about this as well. So what is considered a travel assignment? How long can I stay? You know, the general rule of thumb is you really shouldn't stay in one location for more than 12 months out of 24. Again, that's not a specifically defined guideline in the IRS code. It's more of a general, assumption or a guideline that's used. If you stay more than the 12 months, you may be at risk of losing your tax home, and then the stipends, could be taxable. What the IRS is looking for is for the taxpayer or the traveler to demonstrate a clear break from your location, from your travel location. 12 out of 24 months would be a clear break from that location. So if you work 9, 10 months in one spot, go home, go back to the same spot, another 9, 10 months, you're muddling that area, and then you're at risk of losing those tax-free stipends. Basically, the assignment location could become your tax home at that point. So I think we might have a Q&A here coming up.
Yes, we do. All right. So Donna asked, if I have an issue with the IRS or another state besides New York, can you represent me?
Yes, yeah, we speak to multi-states and the IRS as well. We help answer and resolve, letters or questions that might come up. So the answer is yes, we can help.
Perfect. Let's see. I think we already answered how far can you review back taxes. I think you said you can review them at any point. Is that correct?
Yeah, so from my end, we can go back and look at previous year tax returns, as long as you need. Yeah, the answer is that we can do that. The IRS usually goes back 3 years if they're going to review or audit someone's return, but it's very, very uncommon.
Okay. If you pay rent to a friend, will they have to claim that as income on their taxes?
Well, that's a good question. This comes up a lot. So if you're paying rent and let's frame it this way. If you're sharing living expenses at someone's home, then, it's not a taxable event for the person. But if you're paying them rent and they're pocketing that money, they don't have expenses, or they're not, it's not used for the residence, then it's rental income, could become rental income. So it's sort of a situation by situation basis is how that one should be looked at.
Okay. By location, do you mean the entire state? I'm assuming this is talking to about going back to working somewhere for like 12 months out of the 24.
Right.
So yep. Do you mean the entire state, or is it 6 months in Northern California and then another 3 months in Southern California? Is that different enough?
Yeah, that's a good example because the state is so large and it's a completely different geographical area. So that's okay.
Okay. Do these rules generally apply to other travel health professionals?
Yeah, in fact, they apply to any travel-based worker or employee. So definitely.
If I work 3 days, then come home on my days off, do I lose those days' stipends?
No. So if you're far enough from home, you have a qualified tax home, you're staying away at that travel assignment, overnight. If you can return home during your assignment when you're not working and still be fine for the stipends. I see people sometimes stack their days and then go home for a week or go somewhere else for a week. You can do that as long as you meet the definition of having a travel assignment and you're there and staying there while working.
Okay, perfect. Let's see. There's one. Oh, can you go over the 1099 tips?
The 1099, it's meaning if you're paid as a travel independent contractor with receiving a 1099?
Yes.
So as I said, there's very few people in this travel business that are doing that. I would think there might be some more as we go on here with the new tax law, but if you're set up as an independent contractor and paid as a 1099, we see this with nurse practitioners more often than with RNs, but if that's your circumstance, you are able to take tax deductions for basically any work-related expense. If you have travel, if you have lodging, if you have insurance, liability insurance, or things like that, work uniforms, clothing, equipment, all those things are now, those are deductible for workers that are paid as a 1099.
Okay. This goes back to the earlier question about working 3 days and coming home on my off days. So you mean you can get a hotel for 3 nights and stack your shifts and then go home each week, as you do not need to have one rental for the duration of your contract?
Well, there's always ways to kind of manipulate the system, and it's designed to say that you're traveling, you're receiving stipends while you're on a travel assignment away from home. If you're returning home every week, stacking your assignment, your days up, and then doing that, spending 3 days away and maybe 10 home, that's kind of violating the spirit of the travel assignment. So I think in doing that, you might be at risk of an issue. And again, this is mostly, you're reporting this on your own. So this could come up if it's ever questioned or audited, and that was, if it was questioned at that point, that could be a problem. So I wouldn't really recommend doing that. But if you're returning home every week or every other week, there's no reason you cannot do that and still receive the stipends. Hope that's a good enough answer. It's kind of a difficult question specifically to answer.
Yeah, I feel like a lot of it's a little murky. I understand.
Yeah.
A car that's solely for travel jobs, can you deduct that?
Well, again, only if you're a 1099 independent contractor. If you are working as a W-2 employee for an agency, you're not. You might want to ask Trusted, though, to give you a little tax-free stipend for travel. So I don't know. So.
All right. So this is a great question. So technically, I can only be a travel nurse for 12 months because who is going to keep me as an employee who only works 30 days a year?
Well, so there's PRN, there's per diem shifts you can pick up. You can go home. I've seen lots of people that go home and spend time working as a travel nurse, and go back out, continually for multiple years. So in our experience, there's jobs you could find. They're not always easy to find, but pick up shifts here and there, or local, or sometimes local assignments without the stipends.
Yeah, what I've seen just personally through my own experience and working at Trusted is some people, you can take off as much time as you want between contracts because they are contracts. And so some people go and work for a few weeks straight at their home job, and then, go back to a travel assignment. So they're spending a few weeks working as much as they want to, depending on what you're able to get as a, PRN job. So you can do it for longer than 12 months. You definitely can.
Yeah, and if you go home and you're looking for work and you can't find work, and you just, you have a record of you looking for work, you can go back out, take an assignment, as long as you continue to do that and you have a well-established tax home before you started traveling.
So just to clear this up for a few people, you're saying there's ways to maintain your tax home even without maintaining a job in your tax residence?
Yeah, so again, if you can't find a job, no one's going to force you to stay home and not work. Take assignment as a traveler and just document, look for work at home, continue to, contact agencies that are local or hospitals, or, make sure you have that side of the, of your, situation covered, and then go back and take a travel assignment.
Does that count also for unemployment as well? If you say that if you document, is that actually beneficial to document unemployment?
Yeah, I think that you have to actually be looking for work. If you're filing for unemployment, you should be looking for work. I believe that's a requirement to continue to receive unemployment benefits.
Okay. Let's see. Is there any deductions if the housing stipend is less than the area's rental rates?
Can you say that again?
I just lost it. What am I saying? So if the housing stipend, so the tax-free stipend that these nurses are receiving, if it's less than the actual cost of living is in that area for renting a property, do they get deductions on that extra cost?
No, the answer to that is no. You can't take those deductions any longer. In the past, if you're let's use meals as an example. If your meals per diem was $35 a day or whatever the number was, and that city you worked allowed you to take $50 a day, at that point you are allowed to take a deduction for that difference, but now you cannot. That's no longer allowed with the new tax law.
All right. I think I have we have time for one last question. In your experience, how common are audits of travel nurses? Are we at higher risk than other individuals?
Extremely rare, uncommon. I would say you're not at risk of any other typical W-2 employee. I would say that the people that have most risk for audit are typically the self-employed people or that have income that's not in the form of a W-2. So if you were audited, if we prepared your return, if you're audited, we will answer every question without charge and we'll respond to the IRS or the states and deal with that. It's very, very rare. I think we've probably had one or two full-fledged actual audits in over thousands of tax returns. That doesn't mean we haven't received letters or questions from states. It usually comes from states regarding, a lot of times the state's going to confirm or check on the fact that you worked in North Carolina and paid taxes to some other state. They want to get proof that you paid tax to Arizona. So fairly often a state will send out a letter asking for support on that. And if that's the case, we answer it. That's not an audit. So the term audit for me is when the IRS is really looking for every detail behind what you filed. So that's very, very rare. And if it did happen, I wouldn't be worried. Your returns are pretty straightforward as long as they're prepared correctly as a traveler.
All right. Well, that was a lot of information, guys. I completely understand. Sometimes all of your heads are probably spinning a little bit, and I definitely understand that. Been there myself. I think that's probably all the time we have for questions. If we want to go to the next slide.
So sure, this is kind of summarizing some of the main points that we talked about. First one is to maintain your tax home. The earlier slides kind of give you the rundown on how to do that. The second one, apply for those home state tax credits. Third one, track your travel expenses and related expenses, if anything, so you can support the fact that you traveled, and also so you can offset any travel reimbursements your agency may have provided you. Fourth one, move around, don't stay in one location for more than 12 months. If you do that, you might be at risk of losing your tax home. So those are the big ones. Those are the main topics to keep in mind. I think that's the last slide. So do we have time for any more?
Actually, I'm sorry, I used up all of our time on questions.
Okay. So if that's all the questions we have time for, I just want to really quickly say thank you to Trusted and Casey and Nicole, and for everyone here on this call. I really appreciate everybody's time. I want to express a lot of gratitude to everybody here for spending time with us, and hopefully it was helpful.
And we get about our giveaway, guys.
Yeah, and the giveaway, this is for you guys next. There's a giveaway here at the end. Daniel, come back. Daniel left. Okay, Daniel. All right. So next slide.
All right. So I have a randomizer on my phone, and the lucky number was 47. And I don't know if anybody saw my mouth moving, but I actually just counted through all the participants. And so it was Miss Krista Anderson. Are you still here, Miss Krista Anderson? It says you are. So Krista, if you want to just direct message me privately, just to confirm that you are still here and you are the recipient, that'd be great. But that's going to be a full tax package, and I think that is going to be valid through the end of this time next year. Yeah,
next tax season, because if you haven't finished your taxes this year, we're happy to do them. If not, next year, certainly.
All right, perfect. Well, Krista, I will email you after the event just in case. Oh, she's got it. Oh, yay. Okay, perfect. We're so excited for you.
I got the video back now that we're finished.
Well, better late than never, right?
Perfect. Yep.
Do we have any other slides to cover?
I think that was it. The mystery box, that was the last one.
All right, the mystery box. All right, guys. Well, thank you so much for coming. I know that was a lot of information, so I highly recommend, from my own personal experience of filing taxes and everything, to use Joseph as a resource. Just so you know, he did this free of charge today for you guys, just to help you out. So I think it speaks volumes to him as a person. So thank you so much for taking the time to educate us all. I know this is probably, you're answering the same questions that you get asked all day long. So we really, really sincerely appreciate it. And then everyone, thanks. I'm glad you were able to make it. We will be doing events about every week from hopefully here until forever. So our next event is it the 9th? Nicole?
Yes, it is. The next event is completely different content. It's actually a virtual makeup tutorial. So day to night. So all of those times that you're going to go spend time, social distance outings, that would be a great thing to do. And it's a nice relaxing way to connect with some other nurses. So check out our
will
page.
also
I'll
be
be
the makeup.
I'll be there.
Obviously.
I'll be there.
All right, guys. Thank you so much for
Thank
coming.
you.
You see us at our next event, and please complete that post-event survey if you get a chance. All right. Thanks, guys. Have a great night.
Bye,
Thank
all.
you. Bye-bye.